Hi everyone, this is a casual video for a Friday night. It's 10 p.m. and I just wanted to talk through three particular cases that I've been looking at this week. So the first case that I've been looking at, we've actually been looking at this case for a good few weeks now, but it's the case around a professional footballer from Saudi Arabia. Now, this professional footballer has connections to the UK in the sense that he owns 6 properties in the UK through his UK limited company, and now he intends to move to the UK temporarily. So temporarily is a key word when it comes to his domicile status. So what we've been looking at for this particular client is the statutory residency tests before he arrives into the UK. So it's a bit complex. Obviously, I'm not going to go into too much detail, but he was in the UK at the start of the tax year, and we provided some advice back then. And it was complex, and it was to be honest, it was a massive win for the client, but also for myself. I was quite impressed with myself in the sense that there was a lot of navigating to do. So a lot of my work is navigating the intricacies. So the statutory residency test, split year treatment, will be looking to claim and also effectively or tax efficiently running his UK properties through his limited company. There is another angle that we haven't been instructed for yet, but we will be very shortly, just one step at a time, right? We don't like to jump around too much, which is he owns properties in Saudi Arabia. He owns land and properties in Jeddah, Saudi Arabia, and he would like us to transfer these properties and land into a newly incorporated Saudi Arabian entity, and through my sister firm, we'll be able to assist him on those matters too. So UK and international tax advisory is ASWA tax, and that's what this video is mainly about. But there's also Middle East company formations and setups. So UAE, Dubai, Abu Dhabi, Riyadh, Saudi Arabia, Qatar, these kind of places we can assist. The second client is a property landlord. Now, his only income is from property. He doesn't do anything else except for property, just to make that clear. And his income from properties, and it's been like this for a long time, so you could say he has missed out. He would have done well speaking to us earlier, sooner rather than later, but it's fine. Such is the case. Not everyone knows everything, right? But his income from properties is around £200,000. Okay, so on his UK tax returns, he has the personal allowance. He has amounts up to 50,000, which are at 20%. Then he has amounts up to 150,000 at 40%, and the excess 50,000. These are profits, right? Just to be clear, these are profits. £200,000 in profits. He's paying tax, UK personal tax, on £200,000 of profits. So 50,000 at 45% is roughly, it is £22,500. So he's paying, he's easily paying £100,000, close to 100,000, so between 70 and 100,000 pounds in UK tax. So some properties are owned personally, some properties are owned with his wife. He has 3 daughters and he has 5 grandchildren. So we've been instructed, or we will be getting involved in terms of, benefiting him from a tax perspective, whilst also helping him achieve his objectives, which is, okay, he wants to pass down properties and the rest of it. He wants to pass down assets. So the first step would be incorporating the portfolio, so we have more control over what is taxable in his personal name and what is not. That's the first thing. So himself and his wife, we have full control in terms of what's taxable for them as individuals and what's not taxable. As in what's taxable in the company, which is, yes, 19%, but it's better than 40 and 45%, right? And then the second thing would be that he has access to dividends, which are again at a lower rate of income tax compared to profits from a property business. So he will, him and his wife, his family, let's talk about himself and his wife initially, but they will receive massive benefit, income tax benefits immediately, and also capital gains tax benefits. So we'll be wiping out, years and years of capital gain, up to 30, some properties were purchased 30 years ago. The final point, I only have 30 seconds of recording time left, unfortunately, is inheritance tax planning. We were instructed by the children, the siblings of a mother, and she's elderly now. She owns 3 properties, estate value close to 2 million. I think the main residence is about 1.1 million. So we've got involved, and we've prepared our advisory report. We've crunched the numbers, used our expertise, and we will be saving her a load of tax. I'll speak to you soon.